Okay, folks, welcome to the Best Stock Picks video. This is Bob Desmond over at the Contrarian Trader. I haven't made a Best Stock Pick video in several weeks, so it's good to speak with you folks out in social media once again, and I look forward to coaching our members through these trades in the coming week. And I will be going over the health of the overall markets on Market Pulse Check with members. That's going to be coming out tomorrow, Sunday. Also coming out tomorrow is Focus Stock Analysis video. That's where we review the trades that we currently have in our portfolio and go into more detail on the charts of the stocks that we like moving into the coming week, because we believe in trading the charts and not the story. And that's the key to becoming a very, very successful trader. So let's kick it off. How was our week last week? That's the first thing you should be asking. How did this guy do, and why am I listening to him? We were adding to short positions of the IWM while it was making all-time highs. Why? It's because it was extended. The chart was flashing topping tails, a sign of resistance, and we added to our short position here on the 23rd. 2 days later, the largest down move in a single day in about a year. Best Buy. We were shorting Best Buy as it began to top out at the upper band of its rising uptrend channel. Sure enough, it broke down, closed below the lower band of the rising uptrend channel. We booked profits. I still like Best Buy as a short, but I think what's going to happen first, we're going to get a counter trend move. They're going to try to recapture either A, the 20-period moving average here in green, or B, the lower band of the prior uptrend channel. Then we'll look to short into that strength. Michael Kors. We booked profits to the long side of Michael Kors. Let's kick it off first with a weekly chart. Why did we get involved with Michael Kors? Well, first off, my father was watching it, so I'll give him credit for bringing it to our attention. And while I was talking to him about it, I made note that we were trading below the lower band of this historical support level last seen back in July of 2013, and it was key that we recapture it, or else the probability of us breaking down further was very, very likely, perhaps to the lows seen back in June of 2013 at the $57 per share level. But we recaptured it. We went long, daily chart, and we enjoyed this rally higher. We booked profits as the stock hit the 50-day moving average, and sure enough, only minutes after we booked our profits, sellers moved in because the 50-day moving average is a natural resistance level. Am I still bullish on Michael Kors? Yes, we'll be looking to get long once again. Weight Watchers. We had a day trade in Weight Watchers as it bounced off of these extreme oversold levels. We booked profits, moved to the sidelines. We are looking to build a position in Weight Watchers, WTW. New stocks that hit our screener, Apollo Group, APOL. Extreme oversold stock. The key to trading stocks that are extreme oversold or overbought levels, you need to use multi-period charts. What does that mean? Well, it means that we use weekly charts or monthly charts when necessary to identify where there is historic support if you're looking to buy a stock, or historic resistance if you're looking to short a stock. That's valuable information. All too many times, people are using simply daily charts to time their trades. Very, very big mistake. You need historical charts to give you an edge over other traders. If you're not doing that, don't blame the market as being rigged for you losing money. You're not showing a discipline. The answers are out there. The markets are an open book test. The question is, do you have the discipline to turn the pages, look for where there is historic support and historic resistance? History in the stock market may not necessarily repeat itself, but it certainly does rhyme. Don't ignore history. Now, with stocks like Apollo Group, this is a stock it's a story stock. People hate it. The government hates it. Obama declared war on this sector years ago. They're trying to reinvent themselves. It's a broken stock, but if you're looking at the charts and if you stop listening to the talking heads that talk about this stock, you'll see opportunity. You have RSI, which is trading below 20. Is it time to buy it now? No. With members, I'll be going over the weekly charts, identifying historic support, and plus, what is our catalyst? Is it a short squeeze? Is it a dividend play? Is it hidden value? Those are the things we want to talk about on the Focus Stock Analysis video. Down volume bars, huge institutional distribution. It's not time yet. We'll be watching it. CECE, this is Seco, Environmental Corp. It doesn't matter to me. What the company does, what matters to me is the chart. Again, we trade the chart and not the story. Now, back here, I'm sure that there were talking heads that were out there speaking all bullish talk about CECE. However, if they were looking at the chart, they would have noticed that you had a head and shoulder setup. Left shoulder, head, right shoulder. Here's your neckline. Now, you didn't need for it to break the neckline to get out of this trade. All you needed to do was look at the fact that we couldn't break above this prior resistance level. We flashed a big topping tail, a sign of sellers above. I don't want to be in this stock. The market was sending you a signal, get out. Sure enough, the next day you had an inside day, very bearish price action. The 50-day was now in a decline and threatening to take out the 200-day moving average. Sure enough, the following day, what day was this? March the 4th, a breakdown. I don't know on what news, downgrade, earnings, who cares? The fact of the matter is now the path of least resistance remains to the downside. We have RSI, which is below 20. It can go lower. Don't listen to technical analysis for dummies saying buy stocks when the RSI goes below 30. You'll go broke. You need to use indicators and, more importantly, price and volume action. And if you're looking at simply the indicator, you'd say to yourself, wow, it's oversold. I should buy the stock. No. You need to look at the price action, and the price action and the volume action is saying avoid this stock like the plague because it's going lower. Note the institutional distribution. As the little guy, we do not want to fight these guys. These guys want out of this stock. There is blood in the streets. Now, while I love to buy when there's blood in the streets, I want the murder to be over. I don't want to buy when the throat's getting slit. And right now, the throat is getting slit on CECE. So we'll wait till these volume bars to diminish, and that's our opportunity to more closely evaluate the intraday charts, the daily charts, and more importantly, believe it or not, the historical charts. Do we have any support below here? I don't know yet. So we'll go over that with members on Focus Stock Analysis. DXM, Dex Media, RSI below 19. Not sexy enough. Still not overbought enough. Why is that? Well, granted, we had bottoming tails on Thursday, the 26th. We gapped higher on Friday, but what did we do? We sold off the highs of the day. It's not oversold enough yet. And this topping tail tells me that there are sellers above. Interesting slow stochastics. So while I think that this sell-off is nearing an end in DXM, we need to do a more thorough analysis of both the weekly charts, monthly charts if necessary, to identify historical support. And then we want to look for our catalyst. What's going to send this stock higher? Is it a short squeeze? Is it a value play? Does it pay a dividend? So members, stay tuned for Focus Stock Analysis. Paragon Shipping, extreme oversold stock. Know what happens when you get these extreme oversold conditions. RSI normally goes below 12 historically, and then you see a nice rally. So we're looking for that setup right now on Paragon Offshore. And with this stock, we still have institutional distribution. We need these volume bars to diminish because we're not going to fight the big boys because they're going to win. We're not going to fight them. We want to make sure that their selling is done with. That way, we have a good risk-reward entry point with a defined stop-loss level. So that if we're wrong, we can look to get out with a very small loss. So Paragon, very interesting. Tidewater, TDW. Again, very similar to Paragon. It's seen extreme oversold conditions before and has rallied. I expect history to repeat itself. We're going to see a rally. The question is, do we have historic support below? If not, when is the best time from a risk-to-reward perspective to get long? When I look at the chart, I am looking at RSI. I am looking at all the other indicators, but what matters most is the price and volume action. And last week, we saw clear resistance up here at 21.52. So we know if we get a rally up to that level, there's sellers above. So I need a bigger spread between where we closed on Friday and our entry point. And then we will look to get long and enjoy a rally higher. We're noting the down volume bars, still institutional sellers out there. We're not going to fight them. We'll take a look at the weekly charts and the intraday charts to identify our best risk-reward entry point. PNK, daily chart. We're looking to short this stock. And you may be saying, you're crazy. Everybody in the world has tried to short this stock. I haven't. Not until I identified where our best risk-reward entry point. There's been a massive short squeeze on this name. I will be honest, we do have an open short position, a small one. And if we gap lower on Monday, that's great. But we've positioned ourselves to the point where we're ready to add to our position if they spike PNK higher. Why is that? It's because this uptrend is simply unsustainable. So if they gap it lower on Monday, we'll profit. If they spike it higher on Monday, we'll look to short into that strength. And I made a similar call only a couple of days ago on HC2 Holdings. And I was discussing this chart with members a couple of nights ago on the 26th. I said, this stock is going down. We're going to look to short the name. And I laid out, this is on Market Wrap, I believe, on the 26th. It's posted on the website. I gave the reasons why we wanted to short the stock if we were given the opportunity to. And you may be saying, wow, you're crazy. We know from shorting names like this before that this uptrend is simply unsustainable with RSI 93.42. We are or were trading at the third standard deviation Bollinger, which is really not supposed to happen. And it's no individual reason why you want to short a name. However, when you see topping tails at that Bollinger Band and you have RSI above 90, the risk reward is definitely in your favor. What happened? Let's fast forward to the next day. Here you have it, the 27th. We were down to below $11 per share intraday. It recovered, but net, it was down 9% on the day. Would I short this stock right now? No, because the edge is gone. And I'm certainly not going to try to chase the short down because it could rally back, which it did. It traded well off the lows of the day. So I don't want to be reactionary. I want to identify opportunity, much as what we see on PNK, and then look to short in advance of the correction. And members, again, I will be sending out the week ahead commentary, which is the market pulse check, where I discuss on video the health of the overall markets, where do I think it's going in the coming week and weeks. We're going into earnings season. I'll also be sending out focus stock analysis, where we'll review our current holdings and go into greater detail the charts I've just gone over. And again, we'll use multi-period charting, weekly, daily, intraday. And what are our catalysts for the stock either to decline or to rally? If you're not a member, sign up for our 14-day free trial offer, and I will talk to you soon. Have a profitable trading week. Be well.